what are we doing as a technical analyst when we look at supports and resistances is to look out for. The next topic for us is how to master supports and resistances. Now, as we looked at in the previous topics, Bhav Bhagwan Che and technical analysis is the study of supply, demand and sentiments. Now, when we look at prices, when the demand is greater than supply, the prices tend to rise. When the supply is greater than demand, the prices tend to fall. Now, what are support zones and resistance zones? For example, the price is rallying and there are a bunch of previous resistances, which could be previous tops, moving averages and previous bottoms, various points, a lot of supply zone. That is where we expect resistance to be. In the same way, on the way down, you see there have been previous multiple bottoms around those prices. There is the 200-day moving average or the 50-day moving average. That area will act like a demand zone and a support zone. Now, what are we doing as a technical analyst when we look at supports and resistances is to look out for zones where the risk reward is in your favor. Say on a support, if the reversal is coming, you have a risk reward buy opportunity. Similarly, on a resistance is a place where you want to book profit or look for a short position with a stop loss in place. So the next part is how to identify support and resistance zones. There are three major things which we look out for. First is previous tops and bottoms. Second is trend lines. And the third is moving averages. Now, when we are talking about previous tops and bottoms, what we are looking at is, say for example, say the index is 10,000 to 18,000. Previously, it made a top at 15,000 multiple times. Now, the index has started correcting from 18,000 to 15,000. So that 15,000 price point would be a support area. In the same way, on the way up, that 18,000 band where maybe there are a couple of tops, that will act as a resistance. So previous tops and bottoms will act as supports and resistances. The next one is trend lines. So when you look at a higher top and a higher bottom formation, you're joining a trend line, joining the bottoms. Now, as this trend line progresses, there will be support areas. In the same way, an upward trend line will have resistance areas. The final one is looking at moving averages. Now, this is a little tricky part. We'll see much more detail in the moving averages part. But some of the moving averages which we look out for is the 200-day moving average, which generally acts as a major area of support or a resistance. And there are various ways to look at moving averages as we will look forward. So what we are trying to do is identify which are the support zones and resistance zones, and then look for price action for confirmation of a trade. So now when we talk about support zone or a resistance zone, it is not an exact price point. There will be multiple tops around say 15,000, 15,200. There will be multiple bottoms at say 12,000 to 12,400. So it's a zone which has acted as a previous barrier or a previous support. So this is basically you're looking at zones rather than an exact price point. Now let us take an example of this Nifty chart in front of you. So this is the chart which we look out for in 2015 where we are making higher tops and higher bottoms. As you see the trend line which we make from the first three bottoms, it acts as a support on the fourth time. In the same way on the upper end, we take two tops, the third time it acts as a resistance. Then the trend changes, it becomes a lower top and a lower bottom formation. Then we make the trend lines. When we join the first three bottoms, the fourth time it acts as a support and a major bottom was formed there. In the same way in the whole downtrend, you can see those resistances every time on the trend line. So what happens is this formation continues in a trend and the trend lines allows you to look at the support as well as resistances. And then when the trend changes in a new way, you have a new set of supports and resistances. Now we looked at the trends in a higher top, higher bottom formation to see trend line supports and resistance. Now we look at the same chart in a perspective of support and resistance zones. So if you look at the chart, every time in this period of 2015-16, roughly the 7,800 to 8,000 mark, which acted as a support at one time. Once we went below it, it acted as a resistance. Then we went above it. The next time it dipped, it acted as a support. If you see that 8,000 price point, there are multiple tops and bottoms around that. And that is acting as a support and a resistance at different times. In the same way, on the top side, if you see there is three tops at 9,000. Once that breaks, a new trend starts. So break of a major resistance or a major support starts a new trend. And that is what you want to participate in while looking at supports and resistances. So there are two ways you trade supports and resistances. One is to buy or sell at support and resistances on a reversal. And the second is when there is a breakout out of the zones. Now let us look at another example. The example in front of you is the BSE Small Cap Index. If you look at the last 1 year, this is the current data, there have been 4 tops around the same zones. On the lower end, if you look at it in the last 6 to 8 months, we had a correction. Every time around that 26,500 to 27,500, that has been the support zone, which earlier was a base, which is where the rally started from in June, July. So these are the zones which work out as support and resistances. We are right now at the support zone. Now let us look at another chart. Now this is a chart for Reliance Industries. Now if you look at it for the last 2 years, the stock topped out at 2,300 roughly in September 2020 when there was a lot of fundraising. Post that the stock went sideways. Then it broke out above this resistance of 2,300, went to 2,750. Then you see another top at 2,750, which is now acting as a resistance and will act as a resistance going forward. And on the downside, if you notice, the same 2,300 price point is acting as a support for the last few months, whether it was Russia-Ukraine crisis or whether it was windfall taxes. So this is how supports and resistances play out. Now the last one and the tricky one is using moving averages as a support or a resistance. Now these are tough areas because it keeps on evolving with the price pattern. Now the example in front of you is that we looked at that double bottom in Nifty in 2016. Now if you see as the uptrend progresses, every time there is a dip, it pauses at the 50-day moving average. Then finally, when it starts going below the 50-day moving average, you'll also see a trend line breakdown. And that is where it falls down, and then going forward, that will act as a resistance. So moving averages are a little tricky, but price points are a much more easier way to look at supports and resistances. Trend lines are also good. So to sum it up, when you're looking at supports and resistances, the best way to look at them is using previous tops, bottoms, and cluster areas. And second is to look at trend lines. Third is moving averages, but they are a little tricky one.